Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look again at the euro currency on the daily time frame. Yesterday we have seen the price action on the euro currency that was followed by the speech of the Mario Draghi that we have discussed on the previous week, if you remember, when the euro has shown this bounce to the upside. And when this has happened, we said that currently European Central Bank uses its favorite weapon, that is the microphone. And we said that if Mario Draghi will not tell and will not give the investors the real steps of improving the situation and the economy of the Eurozone, some precise steps that ECB intends to take, investors' patience will not be last forever. And if they will not hear and get any reasonable plan of reducing the problems in the Eurozone, this will return right back very soon. So that has happened during the yesterday's European Central Bank meeting. Well, since Mario Draghi has disappointed the investors that he hasn't told about any precise and definite steps that ECB intends to take for improving the situation in the Europe. All that he has said is that central bank intends to apply some interventions on the bond market to reduce the yield of government bonds of members of the Euro Union. So that is not sufficient to support euro growth. That's why this has happened. Although euro has started some continuation to the upside with the hope that Mario Draghi will provide some additional information, but when this hasn't happened, market has collapsed. Still, in general, current price action on the daily time frame from the technical perspective does not totally break the possibility of further upward continuation. Although this price action is not very welcome from the bullish perspective, since this could be treated as the failure breakout of the flag and returning right back in the body of this pattern. That is not very good from the perspective of upward continuation, but what we still have. Trend holds bullish. Market has shown deep retracement as we suggested, it's around 618 support of that swing. And market still stands in coils inside this downward channel, some kind of the flag consolidation. If market will show the downward acceleration and break this flag to the downside, that will tell us that probably we will not see any upward continuation anymore. So that will mean that market is ready for downward move, continuing the downward move on the daily time frame and on the higher time frames. Since I just want to remind you that overall context currently on the high time frames, on the weekly time frame as well, on the monthly time frame is bullish. It's bearish. That should be just a retracement, ABCD retracement on the daily time frame that, at least till now, it still has some chances to come to life. Well, on the 4-hour time frame, we have a bit complicated situation. Currently, trend on the 4-hour time frame is bearish. I do not have the MACD indicator right here, so you can see it by yourself. What we have, first of all, by this splash to the upside, market has erased our ABCD pattern that we have discussed. If you remember, the target of this AB equals CD pattern was precisely in an area of 618 support, it's 121.75 area of that swing. Okay, currently this level is based on that swing from that low till that high. That's why it's 121.80. Still, market stands at some support. I have drawn this ABC top pattern, but this, you can see, not quite correct pattern because the C point stands slightly higher than A. That is not very typical for estimation and targets, but this extension could be applied if you would like to calculate the support area. And when the stops stands relatively close to each other, this ABCD pattern could be used to draw the support line. As you can see from that pattern, and that's next nearest support area is right here. It's around 121.12, 121.24. That's 1618 extension of that pattern, and weekly pivot support 1. So maybe this also will be some deeper retracement Fibonacci support area from that swing. I do not know precisely, but that will be the next area of support. On the hourly time frame, we see the trend has turned to the bullish side. We see some recovery from the low border of this our flag pattern. That is also our previous ABCD pattern. You can see some respect of this area by market's jump from this level. So if you have entered on the long side of the market, as we suggested now, probably you should have some shallow profit on this position. What could we do with it during today's trading session? Well, today is Friday and today is non-farm payrolls. So I suppose that is better way to tight your stops or even move your stops to the break-even, since overall this price action and this plunge to the downside, this clear out of these highs, taking out probably some stops above this level and returning right back, it's not very good for the bullish perspective. So that is significantly reduce the opportunity to see some kind of A, B, C, D pattern on the daily time frame. It's not very nice, and this makes me worry about the perspective of the support continuation, because this also could be treated as, for instance, wash and rinse of these highs. Okay, market just clear out the highs above this area and returns right back. It's a really solid plunge to the downside. Also, this could be treated as the failure breakout of this flag, returns right back. So that is potentially bearish signals. And although the overall context still holds bullish on the daily time frame, this price action is not very perfect for bullish development. That's why we should be cautious with this and keep an eye on this area, because it's better to limit your potential losses with the tighten order or even move it to the break-even area, since this could be just the shallow respect of this support area. Market could continue move to the downside. It's very difficult to predict currently what development we could see on the market during today's trading session. So that's our current view on the market. Probably the releasing of the non-farm payrolls data during today's trading session will shed some light on the potential price action, and we will take a look on during the weekend on the charts. Probably this could add some details and let us more clearly understand what to expect in the nearest future on the euro currency.